Hello and welcome to the DSP BlackRock Fund Manager Interview Series. We have with us today Rohit Singhania, the Fund Manager of the DSP BlackRock Opportunities Fund. As we know, the fund was incorporated in May 2000. It's 16 years old now. The corpus is about 1,000 crore rupees and Rohit has been managing it since June 2015. Rohit, we know the main objective of the fund is capital appreciation through an opportunistic portfolio. Can you elaborate for us what exactly this means? How do you achieve an opportunistic portfolio?
So when we look at the opportunity fund, the investment approach is a mix of a top-down and a bottoms-up investment approach. What usually tends to happen is in a market is sectoral preferences, large cap, mid cap biases, value growth. These trends keep on changing. So our endeavor is to try and catch these trends earlier and make benefit out of it by investing into stocks which we feel will gain out of the change in stock trends. So that's how it is managed.
Right. And so does this mean a high portfolio turnover? Do you have to maintain a high cash balance to sort of manage this portfolio?
Most of the times we don't take cash calls, But as far as the turnover is concerned, if I like a stock today and I'm convinced about a theme or an idea, I tend to go overweight on that particular stock. Same case when profit booking is concerned, rather than selling quarter of a portfolio weight or half a percentage, you sell more. Mm-hmm. So that leads to a relatively higher turnover in the opportunity fund vis-a-vis other funds of ours.
I see. And so in terms of market capitalization, how does this impact your stock selection? Given that you may need to enter and exit a little bit faster, probably, does this mean that you focus more on large cap stocks primarily for liquidity purposes?
See, when I look at stock selection and stocks forming a part of my portfolio, I think market cap bias is the last bias. If I like the fundamentals of the stock in terms of what I expect to happen next 6 to 12, 18 months, and it fits into my bracket of investables, I buy the stock. As far as market capitalization is concerned, yes, today I have a large cap bias to my portfolio. But if you look at the entire market breadth, if you take the top 300 companies by market cap, they account for a significant part of the overall market. So I am addressing a significant part of the overall market. And as far as quick decisions are concerned, I would like to say is, when you're buying a stock today, you don't buy a stock for 3 or 6 months. You have a 12 or a 24-month view in terms of how the market will shape up, how the finances of the stock or the underlying company will shape up, how do you see the profitability growing. That's how you base your decision on it.
And so if you're looking at the market capitalization breakup of this particular fund, how is it currently positioned?
We would be about 73% large cap and the balance in small, mid cap, micro cap.
I see. And would you say, compared to a regular diversified equity fund that probably are in your own basket of funds or in the market in general, would you say the risk profile of this fund is higher because of the objectives of the fund?
No, I would put it in a different way. When looking at risk profile, right, as far as the stock selection goes, the process which we follow for stock selection, the research team which we have, it's the same across our funds, right? The only thing different I do in opportunity fund is I take bigger bets in terms of weightage. So when I'm convinced about a story in terms of whether it's a stock specific story or it's a sectoral theme, my endeavor is to be slightly overweight on them. So if you call that risk, yes it is, but in my terms, the stock selection process is a pure bottoms-up, top-down approach. You're doing the numbers for the company as you do for other funds. The thought process is the same, but the weightage is higher in opportunities fund.
I see. So you would say that the portfolio construction is really a combination of fundamentals, of market flows, and of movement of stocks in general? It's just a combination?
Market flows, the expectations of the market would determine maybe a overweight, underweight position in a stock or a sector. But again, a stock selection is purely based on bottoms-up approach where you go thoroughly in terms of management, profitability, cash flows, ROEs, and then you buy a stock.
So Rohit, we know the markets have done quite well in the last 6 months. We've seen a really strong rally post-budget. Various sectors have performed at different points in time. Not all sectors have performed exactly the same. Could you highlight for us perhaps how are you currently positioned in the opportunities fund in terms of your sector allocation, overweight and underweight? And also, have you benefited or have you positioned yourself to benefit from the current market rally?
Right. If you see, as far as the sectoral allocation is concerned, today we would be overweight on financials, healthcare and petroleum products as a sector. In terms of underweights, we are underweight on consumer staples, IT, and telecom sector. As far as the construct of the fund is concerned, I think it's been the same since the budget time, as you mentioned. We haven't really changed it. And I think this sector preferences have helped us perform during this period.
I see. And so, your benchmark is the Nifty 500 for this particular fund. How much do you then focus on benchmarking versus the fund in terms of your sector and stock selection?
Like I mentioned to you earlier, the focus is on stocks. If I have the right stock, if I like a stock, then whatever it does to my sector preferences, it's fine. So again, I know the benchmark, but as far as when the portfolio construct goes, I'm sector or benchmark agnostic. It's what returns I see in a stock, I try to put more weightage on them.
Correct. And now that we've seen these markets rally and we've seen fundamentals getting stretched and fairly expensive where we are currently, what would you recommend to investors? Would you recommend investing at this point in time? Would you recommend a hold strategy? Or would you recommend perhaps an SIP sort of strategy?
So when you look at markets and you look at valuations, it's always a difficult call. I'll give you an example. Like today when I'm buying or selling a stock, I don't know whether I'm getting the right price. Whether if I buy a stock today, it's not going to fall tomorrow for my acquisition cost. Same way when I'm selling a stock. So to get a timing is very difficult. So what do you do? Today when I buy a stock, why do I buy a stock? I see the potential over the next 12 to 24 months and then I say, okay, it's worth being in my portfolio. So as an investor also, I think looking at near-term news flows, valuations, and then taking a call, I think that'll be very difficult. So you should have a longer horizon when you're investing in the equities. And I'm always prefer an SIP approach, for an investor, because in the end, it's he who will be looking at equities not from 3 months, 6 months point of view. If you have a larger view, you can play the tide. Even if you go wrong, say first 3 months, 6 months because of market's correction, at least you haven't put in all your eggs in one basket and you have time to even neutralize it.
Right. So great, Rohit. Thanks for joining us. I really appreciate you spending time here. And thank you very much for joining us today for the DSP BlackRock Fund Manager interview series. Goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.